is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And wow, what has happened between yesterday's show and this minute? Just, good Lord, an implosion and a lot of volatility. So if you guys weren't, if you were playing golf yesterday afternoon and not paying attention to what was going on the screens, you missed it. We had about a 25-point rally in about 60 minutes, it seemed like. We had a little bit of news come out early. We got down to this, early on the Fed situation, kind of bled out by Bloomberg. Kind of weirdly, I was like, how did that happen? But how did they know ahead of time? It was just, a lot of questions there. But as we had sold off, this is the kind of conversation that I had yesterday, which was, I'm not feeling it really on direction right now. I'm a little mixed up. I want to get some confirmation, and I want to get the breadth rolling in my favor, and I want to get below 2085.50 again. And I want to look at that breadth, and I want to try to gauge, what I should do, because I've been short-minded for a long time and trying to sell resistance and passing on longs. And yesterday I'd stated that, things are, stepping back from it. And I'm going to pull up our weekly here. We really have been just gyrating since March, basically in the same range. And that range has been from unfair lows at 2060 to unfair highs at 2104, that range. And we're at the bottom of that range right now. I'm just going to consider a little bit of noise here. And we've traveled that relatively quick. And that, that range was traveled in the last 48 hours, I believe. So we talked yesterday about the breadth was kind of edging higher as, we had kind of met the same price levels over time over the past couple of weeks. And, I just was kind of throwing up my arms a little bit and saying, it's on Monday, we talked about an option strategy, short futures against long in the money calls and just waiting this thing out. And yesterday, in fact, again, I had pointed out that I just don't feel like shorting this thing until we start breaking some barriers again, and also referencing the breadth. Well, the snapback rally yesterday off of that 2068 area was insanely painful for some shorts. And along the way, yesterday I talked about 2085.50, 2075, and up top 2102, 2104, and 2060 is down below. Those are the four big pressure points that we've got to pay attention to. And I want to just pull up our 60-minute here. There's that 2075 area. We actually caught about a 7 or 8 point bounce after we broke 2085. And as you can see there, that 2085 area, this is our 60 minutes. So that 2085 is the daily unfair lows and the 60-minute unfair lows. And it was a nice little situation. But we caught a pretty good bounce off of 2075 back up into 2082 or something like that, 7 points. Kind of sold below, went back and traced and hit that. Or excuse me, off of 2085, got a little bounce and then caved through there. So got some traders hitting me right now. Okay. So, that number ended up being a decent little number for a little bit of a bounce, couldn't hold. But when the news came out, all bets were off. And if you were trying to hang on to some shorts and had your stops above 2085.50, that was probably a losing proposition. If you were just not scaling out or trying to hold on to a position. And, that's just unfortunate how sick that rally was. But the action after the rally, and Tom and I were talking about this, there's the rally. There's the rally from, what was the low there? 2066.50 up into 2093.50. My God, that was incredible. But the action after that news came out, was a little it was a little weird to say the least for longs because, when you have a violent reaction like that off news that you weren't expecting and some Fed speak that you weren't expecting, it's almost as if, the market didn't really care ultimately about that. And remember, closing prices are a big deal. At the end of the day, that's where the buyers and sellers have decided this is a fair price. All right. So at the end of the day, on the close, and all the stocks and equities, or whatever you want to call them, have actually ceased to trade. That's where we're at. And, kind of everybody goes home and brings their ball back the next day and plays. And that's the way the professionals do this. So the closing price, Basil talks about it a lot. Steve talks about it a lot. Larry talks about it a lot. David White talks about it a lot. Tom talks about it a lot. That closing price is a big deal. So we closed below 2085.50 again, and the breath still hadn't flipped over on our weekly, but a mixed bag. It was that's kind of what I've been looking for, a mixed bag to really kind of let me know that it's okay to sell resistance. So what do you do this morning? Right now, this 2060 area, and we're trading 2057.50 right now. 2060, as we've been talking about a lot of times, has been that bouncing neighborhood down here. I know there's a lot of bad news out there. There's, people on the TV are like, oh God, everybody's so mixed up, and try not to get caught up in that. Try to discount all that, turn the volume down, and focus on where we're at right now. All right. And if we rattle around down here around 2060, there's a couple of things that could happen. One of them is we could just start spiking off the open. All right, stocks open, people start thinking things are on sale, and that has happened quite a bit since March. All right, in fact, actually, it's happened a lot since the beginning of the year, or December. 2060 is a big level. We're going to have some noise around it. That could happen, technically speaking, and I don't. I'm not going to discount it as why wouldn't it happen, because, seen this movie so many times, especially over the last 6 years. So don't get caught up in, we're going to hell in a handbasket. That's the big level. All right. And how do you trade that big level? In my opinion, since we've basically come off from 2104 down into, we've had a 50-point sell off in 3 days. All right. On the S&Ps. And let's just kind of, put that to the Dow. Let's just call it a 500-point sell-off in the Dow. So, how do you trade this? In my opinion, we could consolidate down here. We could rally back up, or the third thing is we could just continue to fall off a cliff here. And we're going to look around a little bit before we kind of talk about the rest of this equation for the S&Ps. I'm going to look at the treasuries. We've always talked about, long treasuries, long stock, the classic hedge, short treasuries, short stock, the classic hedge. And we always talked about 127.11, 127.14 being that bounce point. So, again, that's held true. Notes and bonds are usually correct historically on what's really going on in the economy. But since we talked about not raising rates, I'm throwing that out the window forever. Nobody's going to raise rates anytime soon. The emerging markets are having issues. China's devaluing the currency. And because of that talk the other day, yesterday, the dollar just started caving in. We're not going to raise rates. Therefore, dollar not as valued, which is kind of our way of dealing with, China taking measures to devalue their currency, the peg value there. We talked about on the dollar, 96.19 being the new support area on this. I'm still kind of standing by that. You're going to have to watch that. And you're also going to have to watch the notes, in my opinion. If these things continue to get stronger and the dollar gets devalued even more, normally that would kind of be a sign to the stock market in the past. But now the stock market could take that as, oh, God, lower rates, cheaper dollar, better for multinationals. This is kind of bizarro world. All right. That normal relationship is not there that it used to be in the past, because these were previously these were almost contraindicators most of the time to the market. Now, the market leans on these type of scenarios as, hey, we got a gift again. And I know you guys already know this, but as we go back to the S&Ps, if we start getting back above 2060 here, I'm not opposed to doing a little bit of nibbling on the long side, all right, for a short-term trade. I think a weekly close is going to be super impacting. Today's Thursday, I think it is. We haven't had a weekly close below 2060 since March, okay? We haven't had a weekly close below 2060 since March. If we get a weekly close, and remember, these are even more technically important than daily closes, that's going to really set the tone that you really only need to be selling rallies and selling resistance areas, and you're going to have to keep your eye on the breadth situation. So what do you do this morning? I'm not opposed to taking a little nibble above 2060 if we can get back above and keeping the stops relatively tight. I think we've had a good move down here. We could have more moves down. And if we do, them's the breaks. We've done all right this past month and the months before selling resistance. But right now, if we churn around this 2060 area and just kind of stay below it or just kind of consolidate around it, that's somewhat of a continuation pattern. So be prepared for another flush on that. But if we get away from this area, and that action yesterday afternoon was really, really depressing for the longs, because that just is not a good sign for longs. But if we turn around here after that type of action, we could head lower. All right. So getting a little bit of a move up here above 2060 would be a little bit of a day trade situation on the long side. But again, making sure we take a look at the breadth here and just keep our eye on what's going on. Remember, the 60-minute crossover is very powerful. We talk about that all the time. We pretty much got that crossover from positive to negative around the opening yesterday. And that means you're, on a short-term basis, supposed to be short. We're going to have to wait and see how the stocks open this morning, and I'm sure they'll open down. So you're going to have to wait patiently. If we cross the 60, 2060, the 60-minute breadth crosses to positive, you're off to the races, in my opinion. Now, what this TAS says button here up at the top, this is kind of, you really need to take a look at this. The long-term TAS breadth is in conflict with their intermediate breadth. Now, we're before the opening, and we're down about 15 S&Ps pre-market. So remember, these are going to flip around a little bit, and it might be a good idea to wait until the equities open. Trading pre-market right now is probably not the best thing in the world. Although the long-term broad market, it doesn't say that. That was my interjection. To continue, although the long-term broad market direction still favors long, they should be taken with caution considering the divergence in place. Breakouts. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show, and we're just kind of finishing up with the S&Ps. Hope you got some levels in your mind to focus on there. 2085, 50, 2060. Take a look at the breadth. The German DAX, this is where we're at real time on this. This is all our profiles. This is our 60-minute down here, 240 daily and weekly. And I want to go to our DAX here and just show you we don't have any yellow peel back signs happening. There's no new profiles attempting to appear. And, you know, based on that alone, I'm going to go to the chart. By the way, we should have our charts out with this pretty soon. I'm not going to give a date, but the programmers are almost ready to launch that. This is our DAX on our 240. No divergences. We talked about this. Just doing a get below the lows just to kind of do it. Stop some people out. We've started breaking down again below 11,345. Here's the situation on the weekly. I'm just going to show that briefly. Only one profile there. So what do you do with this now? Here's the 60 minutes. So the only thing you literally can focus on right now, because you want to see this thing break, showing some green shoots. We talk about this all the time. So if I go back to my scanner, I want to see this gray box turning to green. All right, that'll give me some hints, and that'll be above 10,662. You've got an inflection point you can pay attention to down here at 10,553. These are short-term numbers, 10,553 and 10,662 up top on the DAX. Until you start breaking 10,662, I don't think you're going to have any momentum whatsoever. This is kind of very short-term range-bound. And then you may start having some information, new information appear on the 240s, and therefore what will happen on the scanner is it will start turning a possible yellow peel back on the 240s. And if you start seeing that on the dailies, then I think you might have a chance to start playing around on the long side. But right now, it's hard to short this in the hole. You don't have any resistance areas on the daily to key off of or anything like that. I mean, if you've been short, put it this way, I don't see a lot of reasons to take off the long-term trade yet. It'll tell you when that's the case. It'll start showing some information on the scanner. So that's the take on the DAX. Let's go into gold. I've been pretty reserved on going long this product, as you know. That's been wrong. 1125 was a number we were saying kind of Custer's last stance on this for a while, and that'll be the breakout on the long side on the long term. But I passed on that personally, and right now we're basically in no man's land, so to speak. Let me pull up. This is our December contract. You got a number up around 1159, 1160. That would be targets on this, and now you got more than likely support around 1125. When I say more than likely, we've had the close above that 1125 as of yesterday. That's important. Remember, we just talked about closing prices. That's the consensus view. That is the price. It is what it is, and that's pretty powerful that we did close above 1125, and that means all hints of shorting are over for right now. And there's that 1160 up there, and that there's a huge hole in the marketplace on a weekly and daily. And what does that mean? That means that, in theory, when you get outside these balanced areas, remember that bell curve. All right, I'm going to try to pull this up really quick. We'll pull it up during the break, and I'll show you. Most of this statistical data should lie within that meaty part of the bell curve. That's the same premise with these balanced areas. And if we get outside those areas, that means that the data set's really light, and that means that there's, in this case, in addition to that, the breakout, we've also got a hole in the marketplace, and theoretically prices move relatively quick in these holes because there's nothing. Market participants have not really picked battles in those areas before, so you're going to have extreme volatility in these situations. I don't need to tell you that. Gold's moving around like crazy. The short-term numbers to be aware of, and again, you got 1126 on the 240s as a breakout also. So coincidentally, that again was Custer's last stance for the shorts, and it's kind of used this as support now. So that's going to be a big support area to buy for the whole move here, HOLE move. And you've got 1159, 1160, 1160, and some change as targets above on this move. So the 60-minute numbers are 1133 and 1140. So 1130 down to 1133 is going to be a collection area on the very short term. 1140 short-term support. So I threw out a bunch of numbers there, and I'm going to refer to gold in the scanner here, and here it is. Green across the board, as we just talked about. Level of the market above all profiles. We'll talk about this a little bit more and hit silver when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced
experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up with gold here. Let's take a look at silver really quick. Man, yesterday I had Wild Kingdom behind me here. There's just a bevy of, I'm going to call them eagles, that live in this area. I was shocked. I had to run outside. There was literally a 3-foot tall, I thought it was a hawk, but I'm just going to call it an eagle. I went outside, had a chicken pinned down. I don't know if you want to hear this. It was just incredible to watch. Had a chicken pinned down, went outside. It looked at me. I looked at him. I was concerned. I normally would have gone out there and kicked it, but this thing was so huge, I thought it would have taken a chunk out of my leg. Just kind of walked off the chicken, walked a little bit, and had to get a running start to actually take flight. That's how big this bird was. Incredible wingspan. Had to wait and fly through an area of the trees where it could actually, get through. That's how big it was. It was unbelievable. Chicken lived. It was just amazing. I couldn't believe it. Those chickens are huge. I mean, they're like a dog with a glove on its head. I mean, these are huge chickens. They lay huge eggs. It was incredible. All right, let's take a look at silver. All right, so we talked about getting 1491. We talked about that was kind of the area for silver. Getting back above was okay to be long. And now what do? Obviously, it's a little bit of a laggard relative to gold. Let's go into 240s here. Support on the silver now, 1513. Again, gold could drag this up going higher. So if you guys caught a little bit of a bounce on a pullback above 1491, that is awesome. The targets, just like on gold on a relative scale, probably same general area, relatively speaking, 1585 is gold. Is that 1160 area on gold? Excuse me, 1585 on silver, as well as that coincidental number 1160, that general area on gold. So keep that in mind. Let's take a look at beans. These kind of spun around and didn't want to get away from that 910 area. That was a big number, and we talked about it just piercing below these recent numbers back in June on soybeans just to do it. Now what do? And the action here, really, after it pierced those numbers, when you want to see a reversal or a buying opportunity, you want to see it kind of do these little dipsy doos and then kind of go on its business back up north, and that's not happening. Here's the 240s, that regulation of the trade down, that last area we talked about to be getting some resistance on beans around 923, 924, 925. Now what do? I think you've got resistance, which is kind of wild now, at 9 on the short term on the 240s, and a collection area back up all the way into that 910 area, which is that weekly unfair low. So stops above 910 on this still on the short side. I love how this is acting, actually, and December wheat is kind of hanging in there, but I don't know how much longer it's going to hang in there. This is kind of a continuation pattern also, in my opinion, technically speaking. Here's the weekly on December wheat. Crude oil. All right, we talked yesterday about, on Tom's show, 41.75. That didn't work out on the nibble side, and that's mainly because, not giving myself an excuse here, but the XLE just got completely flushed below that 69.41 area. That didn't help the crude oil situation. But guess what? Crude oil is making new lows, and we've got 66.81 here sitting on the XLE, where the market's obviously gapping down this morning in general, the stock market, that is. And I'm still not opposed to looking at crude oil and getting long back above 41.75. So again, the XLE not making lower lows. Crude oil is. I know we took a pretty big dive on the XLE yesterday, but we had talked about getting into the XLE. That's the beauty of these profiles, is being patient, and getting back above the 69.41 was the long situation, right? And we never did that. And that means that you had to wait for lower numbers. So we're always looking for breakouts or support on the long side, and resistance and breakdowns on the short side. So, no man's land was where we were in to start off yesterday. And that's kind of what the normal process is. So still not opposed to kind of nibbling on crude oil if we can get, at this stage, back above 41.75, but right now we don't have anything to lean on. And that 41.75 is kind of getting back above 41.52 on the 240s. So that would, again, be nice, but you got to sit tight now. We can go lower on this, so just remember that. Here's the 60-minute. A little bit of a bounce this morning, but want to wait for some confirmations on that one. Take a look at some currencies here. The yen, this is still, again, just a lovely situation, I think. Here's the daily. We've met that support, 123.68. Obviously, kind of looking at the dollar without question, but stops below 123.68 on the yen now. I still think this is a collection area, possibly move higher. The dollar, this has been just without question. Oh, man, what happened? Let me redo my video card here real quick. Thanks for being patient. Let me see what happens here when I do that. Okay, I think we're back in business. You guys see my screen? All right, so what's happening on the dollar on the long term? Okay, let me redo this. Okay, so what's happening on the long term on the dollar? This is, previous support was 96, 10, 11. We talked about that. That was, the bounce we caught off of it. Here's the 96.19. That's support now. So this 96.10, 96.19, that's got to hold. So if you're playing the buy the dip, put your stops down below here. And I know Tom's been relatively bearish on the dollar lately. And if we break down below there and we close below there, I might actually start thinking the same thing to race towards the 95.30. There's the big support on the dollar, 95.30. So 96.10, 96.19, that DMZ, and then 95.30. Those are the big numbers to pay attention to on the dollar. Okay. Okay. All right. Just had to check something really quick. Canadian dollar's kind of been spinning around here. A lot of volatility yesterday, obviously. Here's the situation on the Canadian dollar. We talked about this orange bar attempting to appear. That means new profile attempting to appear. We talked about this. That was a little bit of a sign to maybe start taking some long-term positions off right now. I'm still standing by that. If we get a new weekly demand area, balanced area up there, that's going to be a little bit of a lid on this. So it might be time to take a break from the long side on the Canadian dollar. We pulled back nicely, almost to the tick to support on this. And that was not paying attention to the orange bar, which wasn't enforced last week. And that really caused us to be able to confidently buy that support. But now it's a different ball game. I'm suggesting maybe taking some weight off of the long side on the Canadian dollar on the long-term view. Okay. This has been the gift that keeps on giving. We've been talking about the ruble. I know you guys probably aren't trading this, but just want to review this. This is the reason, the breakout, the retest of the profile, the move up, and letting the daily guide this trade up. We talked about the breakouts recently, above 65.12. No reason to take this trade off, guys. Zero reasons to take the long off since that 53.12 area. And Eddie really put a little fundamental slant on this one, that the next shoe's getting ready to drop over there with the interest rate situation. That's just pinching everybody to no end. Let's take a look at Apple, some of the bellwethers from yesterday, see how they fared. All right, so get this out of the way here. So as we look at the weekly, 124.70, obviously, we had a profile appear on the daily. That was the big breakdown. A profile appear on the daily and got a little bit of a awesome chance to use that as resistance. Profile appearing above price action, that's relatively bearish most times. And divergences in place here. I think Apple's sick. You're still looking for areas to sell on Apple. Here's the 240s. Nothing really to pick through there. Just you got better stocks to buy, put it that way, than Apple right now. Let's go back to the S&Ps. We're getting above 2060 here, and what you want to see on the S&Ps is this thing to kind of get away from this 2060 area and maybe come back and retest it would be pretty powerful. And again, I'm not opposed to nibble a little bit on the long side. But again, daily closes below 2060 are going to be pretty damning, and especially a weekly close. But right now, that's a big area to focus on, is 2060. Let's take a look at Netflix. Typed in the wrong symbol. NFLX. I've got a film of a hawk. I talked about a hawk earlier. Maybe it was an eagle eating the chickens big as dogs with gloves on their head. I've got a film of a hawk that I filmed one day out here. And it was actually eating something that it had killed. I'm gonna pull that up for you tomorrow. It's just gory. It's amazing, actually. Okay, Netflix. Again, nothing's too high. Again, don't be a hero. Try to short this. I saw him on CNBC this morning talking about, is this one of the ones that's going to pull back in a pullback? My answer to this is you've got much easier prey to take advantage of on the short side. But any breaks below 119.73 will give you some reasons, but let it confirm. As you can see, the daily is just regulated this trade up with no breakages. If we have a break below 119.73, that would be the sign. Now, I might give that film to TFNN. Al's actually saying that might be cool. I would love for you guys to see this. It is unbelievable. He had either attacked a squirrel or a mouse or something, and it just could be a hit on YouTube. Anyway. Okay, something else we're going to take a look at. Amazon, see how these things fared. These are, the big three. All right, so this has been something to stay away from, obviously, on the short side. Nothing to pay attention to. Do have an orange bar happening here. We will have a new profile appearing on Amazon, and there's nothing to hang on to. But now we may have a chance to start banging this around and figuring out where support and resistance is on Amazon. Somebody sent me a couple of emails about that. Let's take a look at, ExxonMobil. Tom actually pointed this out yesterday. This has definitely been on the scanner as a weak stock without question, and this thing had showed its hand earlier in the XLE components. It's obviously the biggest weighted stock in the S&P, about 3%. 90.22 was the last big resistance area, and the breakout was below 83.76. If you're thinking about putting this in your portfolio, you might want to wait on this one. All right, this thing can go lower. I'm not saying it will go lower, but you will know, and you will have some better leverage points to try to pick this up a lot cheaper on ExxonMobil. And you know what? I mean, crude oil is going to have to start showing some different signs to even start making this happen. And right now, there's you've got a weak stock in a sector that's doing bad, and this is not one of the turnaround scenes as I see it right now. Take a look at the euro. We're getting back up into that 112 area this morning. That's the big POC on the weekly. Still not a huge fan of this product rallying, but it got a little bit of a bounce off the 110.31 yesterday, and 112 and some change. Let me just point that out exactly. 112.0708 is the big number up top. If we bust through there, we could actually power up all the way back into 114.67. So make sure you have your stops in if you're playing around with shorting this thing. I'm not a huge fan of going long the euro, but if Tom's right on the dollar, which he very well may be, remember this is going to be an inverse reaction up on the euro. Remember, 30% or even more than 30% of the dollar is comprised of the euro in an inverse relationship manner. All right, let's take a look at Shanghai really, really quick. A little bit of reversal again. Here's the big support on this. If we break 35.54, that is not going to bode well for any investor in any scene on the planet. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Example of selling weakness in a market that's at best been going sideways. IBM, again, my pet peeve. I hate this company. 155.88, selling resistance off of there, selling breakdowns. That worked out quite well yesterday. It's not the most exciting situation in the world. It's not the Netflix that may give you, or Amazon that may sell off 20 or 30 points at a time. But you know what? It's relative strength trading. I love it. And the beauty of this is, picking things out in the scanner just kind of makes it relatively easy. Here's some strong stocks, by the way. And here's some ones sitting right at, unfair highs here. PPL as of yesterday's close. Let's just take a look at this one. I haven't looked at this, so this will be blindly pulling it up out of the scanner. Okay, so obviously something that's kind of good run lately. And actually a new profile here. Now this one, a big wide profile, that's concerning. That's relatively scary. So this one, and again, you'll see that in the scanner. This one is something, and here's the 240s here. And we had really good action yesterday, but PPL, can it go higher? Absolutely. It's a $33 stock, but this is one I'd probably pass on relative to this wide profile. This wide profile means that we're going to have some volatility, and we may have a little bit of a pullback on this one, but that is also predicated in the scanner. As I go into PPL and I pull it up, actually that profile is not emitted yet in the scanner. We got to have that thing open, so that's the situation on that one. I want to take a look at UTX too. This is something else I've been paying attention to. It's just, classical technical analysis had the big sell-off profile appearing above in the long term. Trade 98.20. Let's see where we trade in pre-market here. 98.09. I like the way this is acting. Again, this thing could go much lower. UTX stops above, in my opinion, 103.40 on the long term. The intermediate, you guys could be a little bit more stingy. Probably put them above 100. And UTX to me seems like it could be just consolidating and spinning to actually do another dive south. I think this is a relatively safe trade. It's a somewhat expensive stock. Make sure you put your stops in and balance it out monetary wise. Remember, I'm from North Carolina. All right, just to recap here, S&P's kind of hanging around this 2060 area, which is a big number. I think you can play around with this level today. Use it to orient stops around. We could have a little bit of a bounce here, guys. We've sold off pretty good lately. Yesterday's close was very ugly, without question. Long-term breadth is still a little mixed up. Just remember, we haven't got full-on get short until we have a weekly close above or below 2060. Below 2060 would predicate that. Let's take a look at one more thing before we hit the end of the show here. I want to pull up the NASDAQ, get some numbers on this one. This has been one that's been a little bit more cooperative on the short side, and we were able to use that 45.60 area a couple of days ago, and then that has been the barrier of entry for longs above there. And yesterday it acted, in my opinion, extremely well. On the short side, excuse me, barring that massive, crazy rally we had. Folks, stay tuned for Larry. He's next. And then Tom after that. You guys have a good day-to-day trading, and I'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.